Wall Street indices end with losses ahead of key job reports due today. The dollar slips while U.S. Treasury yields rise. U.S. President Donald Trump and billionaire Elon Musk escalate their disagreement about the U.S. budget bill into a big public argument on social media. Musk says Donald Trump is in the Epstein files and calls for impeachment, while Trump threatens to terminate Musk's governmental subsidies and contracts. Tesla shares plunge amid the feud, wiping out $152 billion in market cap. Asian markets open mixed as investors assess Trump's phone call with Xi Jinping. The gift nifty is indicating a muted start for the Indian market. Crude extended a decline for the third day, the Brent falling marginally to $65 amid signs that Saudi Arabia may take another production decision at the next OPEC meeting. Meanwhile, gold prices remained on the lower trajectory. Spot gold steady at $3,373 an ounce, while U.S. gold futures were down 0.1%. The Monetary Policy Committee is expected to cut the repo rate by 25 basis points today, according to CNBC TV 18 poll. A majority of 60% expect a 50 basis point rate cut in this cycle. Hello, good morning. You've tuned into Power Breakfast, coming live from CNBC TV 18. I'm Vinny Motiwala. Thank you so much for tuning in, as always. An interesting day that shaped up in the US market, at least, and that's why we have cues coming in from the Asian markets, which are very mixed as of now. So look at the Taiwan index. That's very, very muted, down, negative bias that we're seeing. Hang Seng, not much of a move, 0.04% uptick, slight bit of a positive bias on that front. What we're watching out for, ASX 200, 0.1% of gain on that front. Shanghai, also some 0.1% of gain. Very, very mixed opening that we're seeing coming in. We have a Japanese index, that's a Nikkei, that is managing to hold on to gains of 0.5%. So mixed opening is what we're seeing coming in from the Asian markets. Nifty implied open, let's look at that, right? Because that's indicating a muted start for the Indian markets. Today, we're seeing a bit of a decline that we're expecting. Negative bias, 20 basis point down, largely muted, but slight bit of a negative bias is what we could watch out for, given the handover that we have from the US markets, where we saw Wall Street that ended lower ahead of May's jobs report data. The Dow shed almost 108 points, S&P 500 lost 32 points, and the tech-heavy Nasdaq, that fell 162 points as well. Tesla lost its trillion market cap status yesterday in the market hours of the US. While this came in, why? Trump said that they're very disappointed, and he was very disappointed in Elon Musk. So that is something that overall we're seeing an impact coming in on the US markets. Now, President Donald Trump spoke with Chinese President Xi Jinping amid all these ongoing trade wars that are there between Washington as well as Beijing. Trade officials from both these countries will also be meeting soon. To determine the location is something that they're waiting out for, and their meeting is soon. But more updates on this one, we have CNBC's Iman Javers, who's joining in with us to tell us the top takeaways that came in from that call.
Long and detailed confirmation now from President Trump on his conversation by telephone with President Xi Jinping of China. The president said the call lasted about an hour and a half. He says they discussed a range of topics, but it focused almost entirely on trade. He says there should no longer be any questions respecting the complexity of rare earth products. Not entirely clear what that means, of course, but he also says our respective teams will be meeting shortly at a location to be determined. We will be represented by Secretary of the Treasury Scott Bessent, Secretary of Commerce Howard Lutnick, and United States Trade Representative Ambassador Jameson Greer. He also says that he was invited to China and that he invited, in turn, Xi Jinping to the United States for a visit. He says that's something that we both look forward to doing. He says the conversation was focused almost entirely on trade, says nothing was discussed concerning Russia, Ukraine, or Iran, and will inform the media as soon as the meeting is scheduled. So clearly a high-level meeting between these two sides coming up at some point, TBD. Not clear from this statement whether anything at all had been agreed to other than the existence of a meeting and these mutual invitations and gestures of respect from the two leaders back and forth. So you'd have to say a positive phone call here, but maybe lacking some of the detail in terms of agreements or agreements to have agreements that I think some folks on Wall Street were looking for. Also, we got some comments from Xi Jinping to Chinese state media. A couple of things that Xi Jinping said that were kind of interesting. One is he said that Trump is welcome to visit China again. He said the U.S. should cancel negative measures taken against China, and that both sides should enhance their exchanges. He said the two sides should enhance exchanges in diplomatic, economic, trade, military, and law enforcement. He also made a couple of points about Taiwan, which is interesting. He said the U.S. should handle the Taiwan issue carefully, and the U.S. should avoid a very small number of Taiwan independent separatists who are dragging China and the U.S. into a dangerous situation and conflict and confrontation. So while the President of the United States' statement on this call said that it was almost entirely focused on trade, the President of China suggests they did talk about Taiwan, and the President of China issued some warnings to the U.S. side, Carl.
Thanks so much for that. And moving on, reacting to the call between the top leaders, Chief Global Strategist of Deutsche Bank, Binky Chadha, says that talks between the two countries need to be more constructive. Listen in.
I think a lot of the dialogue has sort of gone to basically a level where we are discussing trade as a zero-sum game. I mean, you know, it's like trade theory 101 tells you that. So if we keep insisting on talking about who's winning, I think, you know, the simple point is we're all going to lose because the gains from trade are positive for both sides. And so I think we need to switch the dialogue to be a little bit more constructive. I think, you know, from a game theoretic point of view, I mean, the game that's being played is tit for tat.
And Donald Trump and Elon Musk escalated their disagreement about U.S. budget bill into a big public argument on social media. Dia rounds up the highlights from this. Dia.
Donald Trump kicked things off during an Oval Office meeting with German Chancellor Friedrich Merz. Asked about Elon Musk's criticism of his big, beautiful bill, the U.S. president told reporters, "Elon and I had a great relationship. I don't know if we will anymore."
Look, Elon and I had a great relationship. I don't know if we will anymore. I was surprised because you were here. Everybody in this room practically was here as we had a wonderful send-off. He said wonderful things about me. You couldn't have nicer. Said the best things. He's worn the hat. Trump was right about everything. And I am right about the great, big, beautiful bill. We call it a great, big, beautiful bill because that's what it is.
Trump also told reporters he was very disappointed in Elon, telling them he knew every aspect of this bill. He knew it better than almost everybody, and he never had a problem until right after he left. He said the most beautiful things about me, and he hasn't said bad about me personally, but I'm sure that'll be next, but I'm very disappointed in Elon. I've helped Elon a lot.
But I'm very disappointed because Elon knew the inner workings of this bill better than almost anybody sitting here, better than you people. He knew everything about it. He had no problem with it. All of a sudden he had a problem, and he only developed the problem when he found out that we're going to have to cut the EV mandate because that's billions and billions of dollars, and it really is unfair. We want to have cars of all types. Electric, we want to have electric, but we want to have a gasoline, combustion. We want to have different. We want to have hybrids. We want to have all. We want to be able to sell everything. And when that was cut, and Congress wanted to cut it, he became a little bit different, and I can understand that. But he knew every aspect of this bill. He knew it better than almost anybody, and he never had a problem until right after he left. And if you saw the statements he made about me, which I'm sure you can get very easily, it's very fresh on tape, he said the most beautiful things about me. And he hasn't said bad about me personally, but I'm sure that'll be next. But I'm very disappointed in Elon. I've helped Elon a lot.
Musk denied Trump's statement on X, beginning in a flurry of posts that stepped up his feud with the president. Musk wrote, "False. This bill was never shown to me even once and was passed in the dead of night, so fast that almost no one in Congress could even read it." He went on to claim that without him, Trump would have lost the election before bemoaning what he called such ingratitude. The president followed up by threatening to terminate Musk's government subsidies and contracts, prompting a return threat from the SpaceX boss to decommission the Dragon spacecraft, which brought home astronauts stuck on the ISS for months, potentially throwing US space programs into turmoil. Musk also suggested Trump should be impeached and that J.D. Vance should replace Trump, warned that global tariffs that Trump imposed could cause a recession in the second half of this year, and claimed Trump was in the Jeffrey Epstein files. That's all for today. Now back to you.
Thank you so much for the latest update there, Dia. But on that note, we're going to slip into a very short break. And after the break, we'll get you set up for today's trading session. Important stocks to watch out for, so don't go anywhere. Welcome back to Power Breakfast on CNBC TV 18. Now, how did all those overnight market cues, the Asian market cues, how is all that going to be impacting our Indian markets? We have a team of research joining in with us, set you up for trade, tell you important stocks to watch out for, as well as cues in the world of F&O. First up, let's go across to Hormaz, who's waiting by to tell us what are we watching out for in terms of important cues for today. Could we expect a bit of green today as well, Hormaz? Good morning.
Morning, Vinny. And of course, all eyes will be on the RBI governor today as to what kind of policy does he manage to deliver, because the Nifty has already risen 200 points in 2 sessions in anticipation of a strong RBI policy. And but despite this 200-point rise, it is struggling to cross that 24,900 to 25,000 range, which is turning out to be a barrier for a pretty long period of time now. But the good part is that the Nifty is making higher lows on the charts. The intraday lows have been increasing over the last 3 trading sessions, as you could see there. Yesterday's low also of 24,600 now, which means that the base is shifting higher. The Nifty Bank, though, continues to remain choppy, as was the case in yesterday's trading session as well. But in anticipation of the policy today, banks, realty, auto, all of them will be in focus today. The realty index has already risen 5% this week in anticipation of the policy. Now, the street has already priced in a 25 basis points rate cut here. But now if the rate cut is more than 25, of course, that can be a positive for the market. It could help in a breakout above that 24,900 to 25,000 range. So that will be something that will be eyed by the street. And the majority of CNBC TV 18 Citizens MPC are also anticipating a 25 bips rate cut. But what is more important is the future trajectory of how many more rate cuts will the RBI deliver over the course of the next 12 months is something that the street will have their eyes on. And 56,000 is a barrier for the Nifty Bank. But of course, our more than dovish policy can negate all of these levels. But for now, the GIFT Nifty is indicating a slightly subdued start for our own markets. Will be interesting to see how the policy turns out.
Absolutely, Hormaz. Thank you so much for that. But let's move on and go across to Ria, who's here to tell us which are the important stocks to watch out for in today's trading session. Good morning, Ria.
Good morning, Vinny. Let's take a look at the stocks to watch out for in today's trade. First up, we have Ireda launching its rupees 4,500 crore QIP. They've launched this QIP yesterday and they've set the floor price at rupees 173.83 per share. Ashoka Buildcon will also be in focus today. They've received 5 LOIs, cumulatively worth rupees 1,390 crores from Motors Vehicles Department from Maharashtra. Moving on, 2 blocks are expected today. Sources say that on Bajaj Finserv, the promoter entities Bajaj Holdings and Jamnalal Sons are likely to sell up to 1.94% stake in the company. The floor price has been set at a 3.3% discount to the current market price. For ZF Commercial as well, sources say that a block deal is likely to happen on this front as well. The promoter WABCO is likely to sell a stake up to 3.13%, and the floor price has been set at a 10% discount to the current market price for this one. Moving on to JSW Energy, this one will remain in focus. They've commissioned 281 megawatts of organic renewable energy capacity, and further the company's arm has also signed a power purchase agreement for STU connected 250 megawatt wind capacity with Adani Electricity Mumbai. Praj Industries to also be in focus today. They've collaborated with Enersur SA for a biorefinery project in Paraguay. Keep your eye out on Coal India as well. They've signed a non-binding MOU with India Port Rail and Ropeway Corporation for the development of rail infra for Coal India. So keep your eye out on all of these stocks today.
Okay, Ria, thank you so much for that. And finally, Sudarshan is waiting by to tell us what's going to be happening in the world of F&O today. Good morning, Sudarshan.
Good morning, Vinny. So it was the second straight day of healthy gains for our major indices, but overnight cues are looking largely subdued, and it's reflected in GIFT Nifty, which is indicating a start with minor cuts. Even it's reflecting in the flows in the both cash market and the derivative. Yesterday in the cash market, we saw FIs selling more than rupees 200 crore, but DIs have bought more than rupees 2,300 crore. In the derivative market, two FIs have sold more than rupees 780 crore, and they have added short positions of more than 3,400 contracts, and their long exposure now reduced to less than 17%. On the call side, major additions were seen in 24,800, 25,000 call, and on the put side, we have seen addition in 24,700 and 24,800. Support for Nifty now seen somewhere around 24,600, and first resistance remains around 24,900. If Nifty crosses that, next resistance comes around 25,080. Three stocks are in the band: Manappuram Finance, AB Fashion, and Chambal Fertilizer.
Okay, thank you so much for that, Sudarshan. We'll keep an eye out on those list of other stocks that will be there and focus on the back of F&O as well. But on that note, we're going to step into a very short break. Up next, we'll put the focus on the key expectations from the RBI monetary policy decision that is due today. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now, the Reserve Bank of India is set to announce the rate cut decision today. A CNBC TV 18 poll suggests that the central bank will cut repo rates by another 25 basis points in this meet. What are the other key expectations? We have Ritu joining in with us. Ritu.
We're going in with the expectation of a hat trick, with the Reserve Bank's Monetary Policy Committee expected to cut rates for the third consecutive time. Now, inflation is tracking well below the RBI's 4% target, and the first quarter numbers are also likely to undershoot the forecast, and so it'll be very difficult for an inflation-targeting central bank to not deliver a cut. Now, while 90% of our respondents to the poll expect a 25 basis point cut in this policy, a smaller section believes a large 50 basis point cut could boost the credit cycle and lift sentiments. The repo rate currently is at 6%, and that is expected to go down to 5.5% in this rate cutting cycle, and that will mark the shortest and the shallowest RBI rate cutting cycle that we've had in over a decade. But a smaller section is expecting the terminal rate at 5.25%. So overall, the market sees space for another 50 to 75 basis points of cuts from here on. Now, most expect RBI will stop the rate cutting cycle by December. Some are even expecting that to happen by August. The GDP forecast for the year, that is most likely to be left unchanged at 6.5%, even as RBI takes note of some of the risks from rising global trade uncertainties. On the inflation front, though, a revision is quite likely, with CPI inflation under 4% for 3 straight readings. A majority of the respondents to our poll expect RBI to lower the FY26 forecast from 4% by 10 to 20 basis points and possibly more, which will support future rate cuts. As for liquidity, most feel RBI has already done enough, and with that record high dividend, core liquidity is expected to stay in surplus in the coming months, so don't expect any big action on that front. But here's what else to watch out for. Any tweaks to the liquidity management framework for one, and there's also been some chatter whether RBI may introduce the external benchmark linked rate, or EBLR, for the NBFCs as well, to ensure that there is better rate transmission. And of course, the street will watch out for commentary on the global macro outlook and how that might affect India. So bottom line is, this is a policy where RBI's rate cut could be predictable, but its guidance and other measures will be what the markets will look at very closely.
Okay, Ritu, thank you so much for that. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, a Bazaar Morning Call.